Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Wednesday. Can you believe it's already Wednesday? Good grief. Let's come over and check the charts. Good morning, Octavius. Always here bright and early. I appreciate it so much, man. 10-year Treasury. Well, a little bit downside overnight, but we're pretty much back to where we were. Not really a whole lot of movement on it overnight. S&P 500, though, man, they are just taking off. They're loving it. All right, oil, well, it's still down. This kind of started from Trump comments, I think, and they want to increase oil production. So, gold and silver. Well, gold breaking out to new local highs. Actually, it's this is the highest that it's been since the beginning of November. Silver, not as much. So I still get this thing, like, it just doesn't look to me like the risk on is in the metals. Because when people are really like, we're trading metals, I want to take risk because I think something's going to happen or whatever, they really pile into silver because the silver is kind of like where the leverage is. But it still continues to kind of like lag behind a little bit. Kappa down from that kind of crazy highs that they were at a few days ago. And the Japanese yen starting to go sideways, but the dollar below 108, that's good. I would like I would like to see the dollar below 100. That would probably be better. But whatever. It's not happening. So this is basically where we're at. We are getting maybe a little bit of an impulse in the treasuries here. I still have this position, and I'm kind of like, I feel like that it should have popped off by now. So I'm really considering taking it off. At the very least, I need to place a stop order. Okay. So that's what we got here today. Do we have any news coming up? Not really. 20-year bond auction. That matters. Those tend to be buys. In this situation, I'm not sure. I don't have a whole lot of information that would tell me either way. Well, let's come over to like Zero Hedge, see what they're talking about. All federal DEI offices to be closed by Wednesday is their top headline. Oh, okay. It seems to me that there's a lot of federal workers that are going to be switching jobs soon. And I think that could have larger implications on the economy, A lot of people about to find out how much of a nightmare this job market really is. Because it really, truly is a nightmare. I'm living in it. Every day I feel like I'm gonna have a psychotic break, but it's okay. I'm on my ADHD medications prevent me from getting too emotional, so we're okay. But it is. I just can't express how brutal and difficult it is. Not to be a drag, I'm seeing a little bit of selling here in gold now, interestingly enough. It is a Wednesday, so we do tend to see, and every once in a while, actually, this is an interesting kind of setup, because when you have like a no news Wednesday, sometimes those are just dead quiet. And sometimes people make like really big moves. And it's just, I'm really surprised to see like yesterday, market was at least the Treasury market was relatively quiet. I did see Donald Trump's threatening tariffs by like February. But the market doesn't seem to have changed from any of that. So I don't know. I'm getting a little bit of stacking over here in the Treasury. Where's my tape? Over here. They are offers pulling actually at 26.5 thousand stacking and pulling there. PJM grid declares max generation alert as polar vortex releases mini ice age. Ugh. Ugh. You know what? We haven't been getting as much snow here in Utah as I thought we would this year. You're already, Uzi says, already noticing friends on Facebook who haven't said crap about anything political for 4 years suddenly absolutely losing their minds. It really seems to me like there are people that have like literally been conditioned to freak out about certain things. And so like even the slightest hint that thing could possibly happen just causes them to absolutely lose their minds. It's just crazy. Like I'll give you an example. I mean, we were talking about this yesterday, but I didn't really go into it. Yeah, it's interesting because they lose their minds over things that have no effect on them at all, but they took lockdowns and 30% inflation like it was normal. Yeah, because there is a certain group of people that are just so insulated from everything else that's going on that they are really not connected to anything that's going on in the world. And when you don't have anything to worry about like that, you will freak out about the tiniest things because you don't have bigger problems to deal with. So like, was Elon Musk intentionally trying to do a salute? I'm Elon agnostic. I don't know. Like, I shouldn't admit this, but I cannot read minds. Everybody else on the internet seems to read minds. I know I have a bald head, but I am not Charles Xavier. Okay? Maybe he's just that clueless. Maybe he really was trying to do a salute and show his support in public and kind of hide it under everybody's nose. Maybe he's just trolling. There's no way for us to know. I can't read his mind. Meanwhile, there's actual stuff happening, guys. Like, Donald Trump, he signed several executive orders, things that have real policy implications and even implications on the economy. There's probably going to be a lot of federal workers lose work. That's going to have an effect on the economy. And the job market, especially in the tech world, is just an absolute nightmare. We have interest rates are going up. Is that sustainable? Or that's what I care about, is what is the 10-year treasury going to be in 3 months? Not, can I read some billionaire's mind to see what he's thinking about, his it's absolutely ridiculous. And it just seems to me like the ultimate privilege to be able to go on the internet and argue about whether Elon Musk is actually a crypto Nazi. Come on. And then ignoring all of the real things that are happening. real thing, like people can talk about what they want. I mean, that's the thing. If we wanted to talk about it, we can talk about it. But what bothers me is all these people making it out to be like, this is the preeminent issue that we are facing in our society today, is whether Elon Musk was actually doing a real solution, when there's actual real things that are going to affect you going on right now. It just is absolutely ridiculous. But then maybe they're not going to affect you. Maybe you're so rich that it doesn't matter what happens, you're going to be fine. I don't know. It super bothers me. It super bothers me. Like, I want to go and read and discuss and analyze what the 10-year Treasury is going to do, and all anybody wants to talk about is Elon Musk. It's so stupid. Of course, I brought it up. You guys don't bring it up. But everywhere else on the internet, holy crap. Yeah, I know real people who think they're going to build concentration camps. I don't know. It's absolutely ridiculous. He pardoned the creator of Silk Road, man of his word. I really, okay. Like, I don't understand that one. The people that say that, like, oh, it was like weaponized government coming after him and they shouldn't have done anything. Like, okay, he created a website that allows people to smuggle drugs and things like that. That is, I mean, he clearly broke the law. I don't understand why he should get a pardon. But whatever. Whatever. If you're pro crypto, you know anything crypto, I guess. Yeah, real people with six-figure incomes who own homes and have children. Yeah. Well, but like, that's the thing is like, most people are not wired in. At least not to the degree that I am. I don't know how wired in you are, but most people are not paying attention to the play-by-play of politics. Most people are not paying attention to this argument that we seem to have every month about whether Trump is actually Hitler. It's just, and so there's some people, they're not paying attention. They see the one thing and they're like, oh, privileged people who spend a bit too much time on TikTok are really the most vulnerable. They drive themselves. Yeah. Well, and again, if you don't actually have real things to worry about, okay, like I can see in myself, normally I'm able to, well, so if your body has too much energy, it says, oh, here's a good time for me to, like, build up for the next crisis. I need to make all of these hormones and all these things and be worried about the next bad thing that can happen. That's the way that humans work. We're wired to handle famine. Okay, so when I'm not working out, I feel very, very different. Feel very, very different, right? Some of these people, they're not doing that at all. They have all of this extra energy. They don't, and then they don't have real things to worry about. Right now, I'm not able to work out as much, but I also don't really have a whole lot of energy to, like, worry about it because, like, I have actual real problems. Okay, I have to get a job here in the next 2 months. Luckily, there's way more jobs. This, like, the week of Christmas, I was literally only able to find like 4 jobs that I really felt were, even worth putting a resume in for. But I found almost a dozen each day, so that's good. But I'm just in survival mode all the time. All I worry about is I gotta get a new job, and so, like, having anxiety over whether Donald Trump is going to throw people in concentration camps is kind of like, I don't have time to worry about that. I'm too concerned about, the actual job market. Okay, so you said yourself, people should be concerned about issues affecting their lives, but with all of America's problems, Trump is worried about. Well, okay, but is Donald Trump making that like the preeminent issue of his presidency or anything? Donald Trump signed like 200 executive orders that day. The one about renaming the Gulf of Mexico, which is super weird, by the way. It is super weird that they're just out of nowhere. Actually, it should be the Gulf of America. Okay, whatever. It was just like one little thing that happened, okay? Why would we focus on that? Like, honestly, the biggest thing that you should be thinking about is that they're saying that there's going to be tariffs in February if Mexico, Canada, and China don't come and negotiate. That's a big deal. They'll go on about how MAGA people are victims of Russian influence operations. So, like, they know influence operations are a thing, but when it comes to themselves, well, that's beyond the... I know, right? Well, it's so wild to me, the ease with which you can manipulate public opinion with these apps. I mean, do we see it firsthand and you think like, oh, it's not actually that big of a deal? But like, most people cannot tell. They cannot tell. I mean, there has been a major change there was a major change kind of leading up to the election, but then after Donald Trump won, there has absolutely been a major change in what I see on social media. Was like all of these people that were like being suppressed in the algorithm before or something like that are speaking out, and I actually see both sides of the story. It's totally wild. Not on Reddit. Reddit, I thought that Reddit would be like, okay, a lot of the stuff that I'm seeing on Reddit is like Kamala Harris's like team trying to push her presidency and everything. And that absolutely was a thing. There's some investigative reporting where it went into the Discord that was doing this stuff and everything. It seems to me that, well, I thought that when Kamala Harris won, that those people would all just kind of go away. It seems to me like they're just like, oh, well, we've got all these connections now. Now we'll just start pushing whatever we want rather than what Kamala Harris tells us to. Because Reddit has just been absolutely unhinged. During his, like the first time that Donald Trump was inaugurated and the first time that Donald Trump won, it was just like tears, and it was funny because people were crying about tendies and all of these sorts of things. In this time around, Reddit just is losing their minds. It's not entertaining, But why should we be? But we were not focused on it. Like, he has like this much like he signed 200 executive orders. I mean, come on. How can you say that they're focusing on that when he signed 200 executive orders in his first day? Now, how about rescinding birthright? There's nothing coming out on that. And well, I don't know if it's blatantly violating the Constitution. That one is a legal argument, one that is probably beyond my legal understanding. He made an executive order about it. We'll see how it goes. I think that on that one, well, I mean, the more broad thing, and that people are talking about, is that they're starting to enforce the law, and they're sending ICE out to employers that are breaking the law and things like that. That's happening. Yeah, that is happening. And, it does affect the labor market, although not dramatically. He said he would end the war in Ukraine on... Well, of course, that's... You don't actually take politicians seriously when they say things like that, do you? Yeah. Trump is the one politician that you hold to every single word he says. Yeah. I mean, I really kind of skeptical about if he'll really be able to accomplish anything in Ukraine. I think that what's going to happen is he's going to come out, he's going to be like, yeah, we're going to negotiate now. He's going to negotiate hard, and Putin's not going to agree, and then the Ukraine war will just kind of simmer on for another 4 years. That's kind of what I think is going to happen. But maybe we get lucky and they actually make a deal. We'll see. I don't know. You know what it is, Uzi? Is that the American public are used to their government being so absolutely useless that when a president comes out and actually has an agenda and pursues it, it's a startling thing. That's what it is. Because, like, honestly, what happened during like, it was kind of funny, like, the Biden administration, they did do some things that I think were very harmful. I think that the current job market is totally on Biden. They juiced the economy when it had already been insanely juiced. And a lot, you know, maybe we would have gotten inflation anyways. I don't know. But, like, he definitely made it so much worse. And then that was like the end of it. That was like they had like their initial first push, and then like nothing happened the whole Biden administration. You know? Obama was always doing stuff, but it was always like underhanded, behind the scenes stuff that people never talk about. Whereas Donald Trump, he's going right after the things that he thinks are the biggest problems. Well, Americans by and large believe that there should be less immigration than there is now. Like the polling says that Americans would prefer less immigration. They're realizing that the more people that there are, the less their labor is worth. Now, the problem with that is that they can still outsource all of your jobs to India, so I don't know what you do about that one. But, like, people are figuring it out. He's doing what they want. We'll see how that one goes. The Treasuries, so I'm seeing something kind of weird happen here. We aren't really moving. Like, there's not a huge net change in cumulative delta, but the market makers on both sides are picking up inventory. So if we get outside of this range, well, I don't have I take that back. We have pretty good evidence to suggest that there is a buy meta order in the 30-year. So if we are to break out on the upside here, you might get a little bit of a push, because it seems like both sides are picking up inventory, and one side might have to dump it later, you know? Well, I you know what really bothers me, man, is when a point is brought up, I destroy that point, and then the other person just goes back to that point like that we never said anything about it. Is that like people aren't actually listening, or is it that they don't know how to counter that argument, so they hope that if we just ignore that and go back to the thing that we want to say, that he signed like 200 executive orders yesterday. That's like what the Gulf of Mexico is named. Is like one tiny little executive order. It doesn't really take a whole lot of effort for them to do that. But, you know, it's a trivial thing. He also signed a lot of executive orders that are significant. He's signing executive orders that are straight up going to lead to government workers being out of a job by the end of the week. Okay, so, but I feel that I destroyed the point, and you just saying, well, I don't think that that point is legitimate, and ignoring it and saying the same thing that you said before makes you look stupid. It makes anybody that's actually paying attention to the argument is going, oh, Seth is actually bringing up points that address what the other person is saying, and this other person is not. Do you actually have a mind, or are you an NPC? If you actually have a mind, then the thing that a person with a mind will do is they'll say, okay, this was his argument. I'll say something that is relevant to his argument instead of just trying to take it back to square one. Do you see what I'm saying? Okay, is it trivially rescinded the price drops on prescription drugs? No. That one is a big deal, but I don't think that they're done on that one. So the whole thing on that one, if you understand the history of it, was that Donald Trump had an order in place while he was president to deal with the prescription drug issue. And then Joe Biden basically rescinded it and put something else in place and then claimed that he reduced prescription drug prices and tried to take credit. I think that Donald Trump is trying to take it back. So I don't think that it's the full story that that there was that one bill. Okay. Actually, that's one worth doing a little bit of search about because, you know, that there might already be more to that story that I just haven't seen. Now it looks like my reading of it is correct. Just because Biden's executive order was withdrawn does not necessarily mean that the payment reform pilots that are in process will be. They could be withdrawn, but the new administration could also choose to continue or to build on these specific programs. I haven't seen any statements on that yet. So probably, you know, he has people within his administration working on that and we'll get things together, but they aren't day one things. It's probably. No, he's 100% right. Trump did it. Biden rescinded it, then reinstated it and took it. That is literally exactly what happened, dude. So now if you're going to argue with them about that, you'll really better know what you're talking about because that is what happens. I mean, there was differences between the order that Trump put in and the order that Biden put in, but essentially it was like Trump had done things to reduce prescription drug prices and then Biden rescinded it and put something else in and then campaigned on, hey, I reduced prescription drug prices. When like the net change in it there wasn't really any net change that he had made. He did brag about it. You kidding me? You must just never watch him. He talk about dropping prescription drug prices all the time, especially during the 2020 campaign. He talked about that like almost every rally. That was something that he brought up a lot because that's something that the boomers really care about, right? So he was absolutely dropping that to make sure that he got the boomer vote. We are on the higher end of the range here in ZN, but I don't think that it's enough to really create any kind of like unwinding of a move or anything. But like I said, there appears to be a meta order buy in ZB, so we might see further. It just might need to get a little bit higher before you start to really see the market buy orders come into the shorter term maturities. So obviously, I think that there are problems with prescription drug prices right now, right? Is Donald Trump, he's rescinding that order and putting something else in place. What are the exact details about that, right? If we come back in 4 years and nothing has changed in that, then I will admit that I was wrong. But right now, I'm pretty confident that there's more coming on that front, okay? But, you know, more to the point, there are certainly executive orders of Donald Trump's that the public isn't really talking about. and it's kind of funny. The thing that everybody's talking about is Elon Musk's salute. Are you going to give me sources here? Yeah, here you go. Oh, Uzi's just giving me sources on that. Yeah, so here it was in 2020. President Trump announces lower out-of-pocket insulin costs for Medicare seniors. Yeah. Under President Trump, for the first time, CMS is enabling and encouraging Part D plans to offer fixed, predictable copays for beneficiaries rather than leaving seniors paying 25% of the drug's cost in the coverage gap. Now, the other one link that you're giving me, though, was like yesterday, right? Yeah. They just go back and forth taking credit. That's exactly it is. That's exactly what it is. I mean, part of the reason why we were saying it the way that it was because when Biden came in, he did the same thing. Like, he rescinded Trump's executive order, like, on day one. And then a month later or something like that, he had his own executive order and to change it and then took credit for it. It was like a month later. So I'm sure that that's what Trump is going to do is a month later, once everybody's settled and the people in his administration that are in charge of those sorts of things are doing their job, then they will put together what they think it should say and put that in, right? Show you. I just showed you. You need to pull it up again. Centers for Medicare and Medicaid Services.gov. I'm literally showing you the government website. Today, under President Trump's leadership, the Centers for Medicare and Medicare Services announced that over 1,750 standalone Medicare Part D prescription drug plans and Medicare Advantage plans with prescription drug coverage have applied to offer lower insulin costs through the Part D senior savings model for the 2021 plan year. Across the nation, participating enhanced Part D prescription drug plans will provide Medicare beneficiaries access to a broad set of insulins at a maximum $35 copay for a month's supply. Pay attention. And this is May 26th, 2020. So going back to what I was saying earlier, where it was like, I destroy an argument and then he just like goes back to saying the same thing. And why would he do that? Is he an NPC or he's just not listening? I think that he's actually just not paying attention, right? Because I told him that we showed him the thing and then he said, no, show me where it says that. And then I had to show him again. That's okay. Well, yes, when you have a really strong political opinion, it definitely clouds your vision. Like we are kind of like chat GPTs. The front part of your brain kind of works like a chat GPT. And so everything that is said to you, especially in like a live conversation like this, okay, your thoughts and logic are not efficient enough to process all of that logically that quickly. Right? You got to come up with an answer right away. You chat GPT it. And everything that you see is being analyzed through this lens, this context that you've given. So given the context that he had, he probably you didn't understand. He didn't get it passed. It was an executive order. Yeah. It was an executive order that he signed. It happened. There was people in 2020 that got their insulin for $35 because of Donald Trump. So it wasn't just like maybe he did a thing, but it didn't actually. No, it did do something. People got cheaper insulin, and then like day one, Biden rescinded it, and for like a month they had to pay the higher price again, and then they went back. I remember people talking about it on Reddit and the Donald, complaining about having to pay more that month. No, he didn't. We didn't say that he repealed and replaced Obamacare. He issued a specific executive order relating to the cost of prescription drugs under Medicare Part D plans. Then again, Biden canceled out that executive order. He signed an executive order that rescinded it. Then he signed another executive order that basically did the same thing. And now Donald Trump is rescinding that order from Biden. And I'm sure that in a month, Donald Trump is going to have another executive order that basically still makes it so that you can get your insulin for $35. Yeah, he came back to 25. Was looking okay there for a second, but now I'm seeing selling in the 30 years, so I think that might be over. No, it was... I just read it to you, Body Bag. I just read it to you. That was the details. They didn't rescind Obamacare. It was just about the Medicare Part D. Oh, yeah, you know what? By the way, you're reminding me I didn't turn on my trading robot here. It's not like a super serious thing, because robots aren't as good as my discretionary trading. How hard is it to make? I mean, it's pretty easy to make robots. You can go watch some of my past videos, and I can show you really simple ones. They're not going to make you money, but, it's pretty simple to make something that actually takes trades. And there are varying levels of complexity. Should have started this already, because I wonder if it would have taken a trade. Probably it wouldn't have. Well, maybe not. It came close. Maybe it would have taken along and would be stranded. So I guess the thing is with the trading robot is that all trading really comes down to this process. You ingest data, you analyze that data, you make entries and exits based on that data. That's trading. There's no way around it unless you're just guessing. Okay, but whether you're writing a trading robot or whether you're doing it discretionary, that's essentially the process that you're going through, right? So the thing that is generally the most difficult is getting the data and analyzing the data to be able to come to decisions about things. Be able to say, okay, how do I get the data to represent the type of conditions that I think will lead to a profitable trade, right? So first you have to go through all this difficulty in doing that. And then once you do that, you might get to this thing where it's like, it doesn't actually reflect the conditions that you want correctly. Like, yeah, it did in that one instance, but then there's another time where it crosses your thresholds and it's not really the situation that you intended, right? Then there's all those sorts of issues. So that's where trading gets kind of difficult. I do feel, Midnight, that like if you want to automate a strategy, then it makes a lot more sense to automate it yourself, learn how to do it and automate it yourself, than to pay somebody else to do it. Right? Because what always happens, like I'm just telling you, this is the way it's going to go. I know that you think that it's profitable, but I almost guarantee you're going to go in, you're going to program all of the entry conditions and everything, make sure that when you test it, you include commissions and slippage, and then you're going to look at the performance, and the performance is not going to be as good as you anticipated. Then you're going to go, oh, I need to change this, and I need to change this, and I need to change this, right? And if you're paying somebody else to do it, then it's just this constant back and forth. Can we do this thing? Like, what's the best, right? And now all of a sudden, there's all of these technical decisions that you have to make. It's a lot better if you're just the technical person, right? And especially if your entries and exits are all just based on an analysis of price, then, well, first of all, if it is just based on an analysis of price, it's probably not a profitable strategy. But if it is, the amount of effort that you will need to put in to actually program it and automate it, even if you don't know anything about programming, is probably only a few days. Okay, so Donald Trump campaigned heavily on replacing Obamacare. That's true. They did not replace Obamacare, but we weren't talking about that. We were talking specifically, you brought up specifically the executive order that rescinded the previous Biden order that reduced prescription drug prices for Medicare Part D prescription plan holders. Right? And we were saying, what's the justification for him rescinding that offer? Well, that's exactly what Biden did. And then we just replaced it with another one. Nobody ever said neither I nor Uzi or anybody else in here ever said anything about Obamacare. They tried to undo Obamacare, but John McCain stopped them. So they weren't able to break out on the other side, and now it looks like they're going to test the downside. And we tend to stick with the points we're presented with as opposed to bouncing around from topic to topic. Yeah. That's the chat GPT going again though, right, Uzi? Like the reason that people do that is you're in a fluid, quickly changing situation. See, you and I, we don't have to do that in this situation because what has happened is we've been reading arguments about it. We're watching the exact things that happened. And so all of that kind of logic and like sticking to the subject and what the subject is and everything has already been coded into our chat GPTs, right? And so we're able to very quickly say, like, here's the point, and here's why what you said is wrong. Somebody that's not used to that, they will tend to fall into certain kind of logical traps, like in this case, changing the subject. Well, we were talking specifically about Medicare Part D drug prices, and now all of a sudden he's talking about Obamacare. I am actually a little bit concerned about this decline because, like, look at what the 30-year did. And then, badish. So that decline there seemed to be driven by what's going on in the 30-year. Pretty significant change to the flows. Possibly just a, minor aberration. I don't know if that's like a large enough meta order to be like, that's going to be the whole day and everything else. I don't know if it's any good beyond, the 5 minutes that it happened, but it is a pretty significant shift here. I think that selling a good trading bot that actually makes money can generate an extremely amount of sales. Well, okay, there are people out there selling robots that don't work and they make money. I tell you what, Midnight, you can put just about anything out there, and if you're good enough at marketing it, you can get people to buy it. It's actually insane how that works, But again, there will never be a strategy that is short term and public and profitable. You got to pick, right? So if it's profitable and public, then it can't be short term, right? That's like momentum. Okay, but if it's short term and it's profitable, then it can't be public. Yeah, double check that. Does that triangle work in all cases? Is short term, profitable, public, or let's call it popular. So if it is short-term and popular, then it can't be profitable. If it's profitable and short-term, then it can't be popular. And if it's popular and profitable, it can't be short-term. Or did I already do that one? Well, the purchases will be from retail traders. They don't move that. Well, yeah, but it like, again, if it's popular, though, I think y'all underestimate how quickly something will scale, right? Because again, if I start, like, here's going to be my account size and I'm making money on it, it's going to go like this. I'm going to size up until the point at which I'm too big, and then I'll do this. So what you have to do is, okay, the way that you calculate this is the, well, you know what? Let me just pull you up like the formulas, okay? Here we are. Okay. So you got the Kyle model in here. Basically, they're trying to solve for Kyle's lambda. They say Kyle's lambda is equal to the volatility over 2 times the sum of the volume. Okay. And I think you can take one of these, and you can take this one. Actually, what am I using? So basically, I have an indicator called Alice, and Alice is basically if it's a 4-tick profit or whatever the tick profit is, what is the maximum, right? So they come over to here. So using those formulas, and it's basically saying, based on the amount of volatility and the amount of volume that we have in here, what is the optimal trade size? So it's saying, and I'm in this particular instance saying that I'm going to trade over 5 minutes and it's going to go 4 ticks. Okay. Then it's saying that the maximum size I can trade is 2,000 contracts right now. Right. So of course, if I increase that size, it will increase that amount. Okay. Now 2,000 contracts, that's a lot, right? But I have 16,000 subscribers. Like what if every single one of my subscribers traded this? It would be too much. You see? It would be a negative edge. And like honestly, if it's like an edge that really truly works and people are making money from it, you can get into the hundreds of thousands very quickly, right? Like this whole price action smart money concepts thing, that guy's got like 200,000 subscribers. Okay. So that's a lot. That's basically so much that regardless of what the edge was, it would stop working because too many people were trading it. Okay. But the Kyle model is basically the way that you kind of estimate how many orders the market can actually handle. So that's when we say popular, basically it can't be more popular than that, right? And that is like a theoretical thing. That's like the most that the market could possibly handle. But because the market is like kind of out there looking for it, probably the amount that you can actually trade is actually half that. So it would have, so like if we were doing this together, right? I have to say that right now, the most that you would be able to trade is 250 contracts. See what I mean? So if you sell an algorithm like that, you certainly would probably get a lot of people to buy it, but are you actually doing them any good? No, because by selling it, eventually the strategies can stop working. And that is basically the mechanism by which alpha decay happens. Do you have it working? I've built many different automated strategies, but I've never found an automated strategy that worked better than my discretionary trading. Oh, you didn't answer my question. Yeah, I was on these. I was about to go back here. Treasury futures follows a good correlation. I'm between. So is trading those correlation breaks at logical levels a good way to trade? I'm not sure. We are actually going to test that. Maybe we'll test that today because we had kind of a framework for maybe doing that. Just hadn't looked at it. Like, you know, there's kind of this issue where it's like if there's a correlation that's really strong, when that correlation breaks, you know, it's going to be against you. And so how much are you going to lose when that correlation breaks? How far, you know? So it might be something that's really fat-tailed. Yes, even if it stops working, we would make an extreme amount of money by then. Yes. Well, but what I'm saying is you limit your size so that the market never sniffs it out. So yeah, I can only trade 250 contracts max on it, but that's a pretty good living. You trade 250 contracts and I trade 250 contracts. We don't make it public, but we would make more than we would from selling it. Over the long run, at least. That's why it just does not make sense to sell short-term strategies, right? Like the thing that's kind of interesting is that all of the strategies that exist out there that like we know are profitable, like it is known in the industry that they are profitable. Well, one thing is that they might be able to give you a broad description of a strategy and not the details, and it's actually in the details where the profitability comes from. But more so than that, they usually require a certain amount of scale, right? Like momentum strategies, you're taking multiple positions in all of these different instruments. It requires a large amount of capital for it to work. It just does. More money than a retail trader has, right? Like you're talking like $10 million minimum. And so that's how we're able to know about them is because the edge isn't in the strategy as much as it is having the resources to pull off the strategy, right? My net worth is only around. Well, if you're so, what's your net? So when we're talking about this, you have to say, what is your net worth excluding your primary residence? Or what is your net worth excluding your primary residence and tax advantaged accounts? Because then that really comes down to the amount of risk capital that you actually have, right? But like the thing is that if it really works, and of course you kind of have to be able to look at the parameters, right? You go and you back test it, and we can see like what is the maximum drawdown on it. Like over the past 5 years, what was the most amount that it had ever lost, right? We would need to be able to handle at least that amount of a loss. We're going to trade it. But then beyond that, If I have more than that, then I can just start, like I can just trade one contract and build the account up, and eventually you're going to get there. And again, like, it scales so quickly. It scales so quickly. So that's how you get these people that are claiming that they've made hundreds of thousands, if not millions of dollars from trading. It's because once you start taking risks, and then you take risk with the capital that you made from the risk, and you just keep piling it on, it's exponential up to a certain point at which it stops working, right? So you would get there. You would scale up to 250, and then you would just trade there for the rest of your life or whatever the market allows. And that would probably be good living. Can't see what market that is. I'm sorry. Some of the things about the way that Jigsaw displays it, it's kind of hard to see. But the name of the instrument is up there. But basically what you're looking at is the 5-year, 10-year, 30-year, and the S&P 500. Spoos. And this is a ZN, it's a robot. It looks to me like it may actually now be to the point where it could take trades, and it would possibly take a trade short, but it hasn't done so yet. I might have some other things screwed up with that one. Kind of had something that, like, we had it all set up to backtest, but sometimes certain things that work for the backtesting, they don't work on live because of other considerations. Like in this case, maybe there's not enough data or something like that. Right. Yeah, I mean, the newer version of Jigsaw is changing some things about the look. And then we can take a look at it again, but... By the way, I didn't say hi. Welcome back, Hentalag. Hentaklag. Nebuchi. You trading ZB today? Well, did you make any money on that short, man? That was kind of an interesting little move. Not a huge move, but it is to the downside. I'm a little concerned by it. Two ticks? Not enough. Because that means that you're short from like 23, and the chances of us snapping back to the point of control at 25 are high enough that I wouldn't sit easy. I have not upgraded to NinjaTrader to 8.1. I would like to, but basically, because I'm trading through... See, the issue is that NinjaTrader basically changed everything to try and coerce you into trading through NinjaTrader brokerage. And I don't want to trade through NinjaTrader brokerage. Nothing against them. Was not up to my standard. Just didn't work very well for me. But I can't use my Rhythmic data any other way. So I have to use the older version. Now, if I bought kinetic data, I can get kinetic data for like $20 a month or something like that. And then I could connect NinjaTrader to kinetic data, and that would work. And then I could upgrade to NinjaTrader 8.1. But at the moment, because I do not have a day job, that limits the amount of capital that I could potentially put in this. So the stream is like its own like self-propelling thing. But, I'm not, I got to save up in case, who knows what happens to be able to keep the stream going. So I can't really, plus we're paying an editor right now. A lot of money is going to the editor right now. If we weren't paying the editor right now, then maybe we could do it. If we weren't paying the editor right now, maybe I would get DX feed too. But Do you know Qualmeyer? He made $100 million from 5K swing trading stocks. You think he got edge over markets, or well, maybe he has edge. Who knows? I mean, for $100 million, that's a lot to make just from being lucky. But the thing is that you might have something that has an edge within that time period, but ultimately blows up, right? Of all the streams I visit, no platform has more issues with freezing than Ninja. Oh, totally. Because it's because of the custom indicators, though, right? You understand it's not Ninja specifically. Like if all I ever did was use Ninja as it comes out of the box, never changed anything about my workspace, then it would never have any issues. But if I'm like developing an indicator, possibly make mistakes, refreshing, going and doing back tests that possibly are leaking memory and things like that, then it's a pretty good chance that I will break NinjaTrader and I have to restart. So, and it kind of depends on the quality of the indicators and things like that. So it seems to have this one issue where if you have a chart that's adding multiple data series, sometimes one data series will just mysteriously stop. So they have some threading issue in there somewhere, but maybe they fix that in the newer versions. But my issue when I had NinjaTrader brokerage was more with the brokerage, right? It was like I couldn't choose the data options that I wanted. I couldn't get my platform to work the way that I wanted. When new product came out, I had to talk to them and argue with them to make, micro treasury yield futures available. It was like, that's too much risk. It's $10. It's an instrument that moves $10 a day. You won't let me trade it. If you guys can't trade it, if NinjaTrader customers can't trade it, who would trade it? You gotta be kidding me. I had to argue with them about that. I didn't argue with them like that, but I was seriously, when I was talking to people on the phone, I'm like, for real? Is this for real? You'd be kidding me. And then I did have some service disruptions and things like that. And when there was a service disruption, the people that I talked to didn't seem to know what was going on. So I picked somebody else. And then I never have problems. I literally never have problems. I had problems, it seemed like, every month with NinjaTrader brokerage, and now I've never really had to talk to EdgeClear. Except for, they follow up with me every once in a while, see how things are going, make sure that everything's cozy. I'm really astonished how great the web-based Top Step platform is performing. Or are you talking about, you mean like NinjaTrader Desktop? / Tradeovate? Yeah. Well, it brings me back to okay, listen, you have limited capital. There's other issues. Listen. This idea that you're going to come in, you're going to trade, and you're going to become a millionaire, that you're going to become this guy that made $100 million, it's very doubtful that that's going to happen to you. Especially your trading futures, okay? There's a limited edge that's available to us as retail traders, and you're going to have to work super, super hard for that edge. It's probably not going to make up for the amount of time that you have to put into it. You're only going to do it if you really, really, truly love it, okay? And it's one of these things that people will come in and they're like, well, there's people. This guy, he has a YouTube channel, but it's a YouTube channel. They're making money from affiliate links. They're making money from the advertisements. They might make money from paid videos, Well, yeah. they're a retail trader, there's a limited edge available to them from the trading. They're going to have to find a way to make money another way. So you can either give content creators a way to make money, or you can just not have content. Because the people that are professionals, by and large, are not allowed to talk to you or reveal stuff to you, or they just don't know enough about the retail trader experience for the information that they give you to really be relevant to you, you know? So what do? Well, you can make okay from YouTube. If I was doing stocks and like more mainstream stuff and I wasn't such an asshole, then probably the channel could be bigger and I could just make money off of YouTube, right? But I think for me, the path that would seem to be the best way to make money so that we'd have more resources to making the content that I make for you guys better, probably the best opportunity that we have is the indicators that we make for NinjaTrader, and then maybe someday a platform. And there is value in the indicators that I make for you. There are things that I include in that package that might seem like really simple things, but I really don't see how people trade without them. I really cannot imagine trying to trade without the dollar index. I really cannot imagine trying to trade the Treasuries without watching the spread. I'm starting to become a little bit dependent on my inventory cost basis model. Like a situation like we're in right now where there's not a clear imbalance in the market and perhaps the market maker is in charge, that tends to be a really good guide. So, you know, and then you want to do the order flow thing. You want to make robots off of order flow. I have some tools that, you know, I think do a really good job of giving that to you and make it so that you can actually like backtest the robots. And that's the thing you can't do anywhere else. And it was not easy for me to make that happen either, by the way. You want to go and try and duplicate it, be my guest. But it took me years to figure out all of the correct pieces that you need to make it work properly. So valuable. You can go to speculatorset.com. If you use NinjaTrader, you can go to speculatorset.com and try the indicator suite for 2 weeks for free. And then after that, it's $200 for a lifetime license. Oh, I missed Ray's comment. Can you use DTNIQ? I maybe could now. Last time I tried using them, they had issues where it was, you know, it would like hijack the CPU, and that was disrupting the stream. Maybe I could do it now, but they're super expensive. I heard a guy say that you can use Bookmap to see where stops are placed. That is not true, but probably what he's talking about is that Bookmap has a way for you to see if a market order was triggered from a stop. So it won't show you where resting stops are, but it will show you where stops had triggered potentially. I kind of feel like that the way that they display it is a little bit limited and everything, but basically there are ways using market by order data to be able to see that. But the problem is that you have to pay for like the $100 a month data, and then I think that there's like a $50 a month add-on in Bookmap, so it's like $150 just to see that. And it's not resting orders. I've never heard anybody say, oh, like there's some serious edge in this, etc. It like pays for itself, all of these sorts of things. If we get to where we're making our own platform, because I think that the next steps are, one of these things is I kind of dislike talking about making the platform, because on one hand, I want to get feedback from you guys about like which features you're interested in and how interested you are in a platform. But at the same time, I don't want to get into the trap of like, you talk about it and that gives you enough dopamine that you don't ever actually do it. I really do want to do it. So the next steps, and I think I might be in the place to be able to start doing some of these steps today. So before that, I was really focused on getting the next set of content out for you guys and learning some programming stuff. But I might have some time to do some of these things today. Kind of just making some of these basics, getting started in Rust, making GUI components, seeing how those all work and what my options are. Maybe making a chart. And then the next step would be getting data and seeing if I can connect my application directly to the data. So I would like to do DX feed, because they have the NASDAQ total view stuff, right? DX feed and Rhythmic. And Rhythmic has, in order to get Rhythmic to connect to Rhythmic directly, you have to pay for their programmatic thing, so it's like $100 a month or whatever. But then you would also get market by order data, and then I would be able to do the same thing that Bookmap does. So now I saw recently somebody from, I think that they were in Ukraine or somewhere like that, somewhere in the Eastern Europe, that they were using market by order data in NinjaTrader. I don't know how they had done that. It seems like that they have their own data connection to do it or something. That's kind of weird. And he wouldn't explain how it worked. So I was like, plus it was insanely expensive. But I'm depending only on technical analysis so far. I would strongly recommend not relying purely on technical analysis in the treasuries. I think one of the reasons why most retail traders, they're all like, all technical analysis, all you need is price action, etc., etc., etc. Well, if you're trading the S&P 500, you probably get away with that for a while before you realize, I think there's a lot of traders that they get enough feedback from ES to think that it's working to keep doing it, even though they're not really making money from it. But the treasuries don't play that game with you. You're going to find out very, very quickly that the treasuries are just extremely technically efficient. Did you just say you can't trade without tracking the Dixie? Yeah, I really can't. I mean, I suppose I could have the individual constituents up, but how are you making trades without knowing the value of the currency you're trading in? How do you differentiate between a flow that is specific to your instrument and because of something that's relevant to your instrument versus a change that's being caused by the currency? Are they witness to more traders getting crushed by using that index? Well, who out there have you seen using it? Because the only way the only way to get live Dixie data is to like true live Dixie data is to have an ICE connection, to be paying for ICE data. Right? The way that I'm doing it is I'm calculating the individual components. So I don't know of anyone else that has a synthetic dollar index. CBOE discontinued TY VIX. Oh, I don't know. Oh, well, I think that the one that you use is Move Index, but I don't know how you get the data for that one, to be honest with you. Yeah. Like, where is that at? Move. ICE Bond Option Volatility Estimate Index, TVC. So you need ICE data, unfortunately. I don't know if you can trade it. I don't know either. Probably not, because it is an index. They need to have futures for it. The thing is okay, so like, I don't know. If you're trading options, watching the VIX and seeing the VIX live is kind of beneficial for you, right? But for what we're doing, okay, volatility matters, but do you need to be able to see these indexes live? Not really. I think that you can get away with only looking at them on daily bars and or just looking at standard deviation on daily bars. I see no edge in watching correlating markets no more than I need to see what the traffic is on First Street to cross Main Street. There is no edge. You're just complicating things. No. So that your analogy there, I don't think is really accurate to what is actually happening. So if I'm coming here and I'm watching the Treasuries and it's moving and the dollar index is not moving, that tells me something really important. That tells me that it's something specific to the Treasuries that is not affecting the value of the dollar. There's only a few things that could potentially be. And honestly, if it were to happen right now, I would be a little bit perplexed as to what's going on, right? But that can very much help you avoid bad action, right? You could also see something like maybe the dollar is moving some way and the Treasuries are staying where they are. But I'm seeing volume in the Treasuries. Then it's like, oh, well, the Treasuries are moving this way, but the dollar index is canceling it out. And I might know the fundamental reasons behind why that is and be able to say, okay, well, but the dollar move is going to stop and the Treasury move is not. So I can buy it here or whatever the deal is. Right? It's very important to understand where is the money coming from and where is it going to. I could see where you'd have this idea that if you're doing technical analysis on a single chart, then you're going to think, well, you know, doing the technical analysis on this chart and this chart and this chart is all kind of like a little bit too complicated. Well, but that's because there's not really a whole lot of edge to the technical analysis of price anyways. But that's in part because there's so much more data out there that matters. So think of it like this. I have a chart. Okay. This chart is the velocity of a vehicle. Okay. So here is the chart of the last hour velocity of that vehicle. What do you think the velocity of the vehicle is going to be 30 minutes from now? Do you know? The technical analysis person will tell you, well, this pattern will continue. So we'll continue to see this, right? But what actually happened is it just went flat. You know why? Because they got home. They're not driving anymore. Right? How would you be able to predict that? Only if you knew where they were going, that they were driving home. Right? The velocity, the current velocity of the car isn't really very predictive about what the future velocity of the car is going to be compared to the actual position of the car. If you can watch the actual position of the car, you can sort out where they came from and where they're going, and you can see that they're heading back home. You see? There's not enough data in this data series. So what do you got to do? You got to add more data. So what are the pieces of data that you need? You need to have the actual orders. You need to have the correlated instruments and currencies, volatility, and then most importantly of all, the fundamental information. The why is it moving? Why are the people that are trading it, why are they trading it? There's a flow coming into the market. Why is that flow coming into the market? Because if I know why that flow is coming into the market, I can guess how big that flow will be. I can guess if it's going to continue tomorrow or not. All of these other things, right? Okay, do you have any empirical evidence of tracking the Dixie? You know what? I don't think you do. I mean, so you really do need the currencies to be able to sort different flows out. I don't know how you prove that empirically. I think that we probably could. I will tell you, the reason why I track it is because when I went to a bank, they were watching those things, especially the commodities traders. That's like man, especially if you're trading like, you know, copper, gold, oil, you have to watch the currency, because those instruments all adjust themselves based on the value of the dollar overall. How do you do the intermarket analysis, and which tickers do you pay attention to? Well, I'm primarily trading the treasuries. So the things that I'm going to care the most about are the intermarket relationships between different parts of the yield curve. So the way that I do that is with the spread. So over here, I can see that we are, well, it kind of started out iffy, but we have started to flatten a little bit, right? The 5-year and the 10-year moved more than the 30-year did. It's only a little bit, but they did move more, which means that you're going to see buying in the 30 and selling in the 10. So based off of that, this is why this is important, okay? Again, you're seeing this go down. And let me do it in yellow. This is the one that you're... Okay, so this right here is the 10-year knob spread, okay? What's it doing? It's going down. So that means you buy the 30 and you sell the 10. So now that we know that they are buying the 30 and selling the 10, we can use that to kind of adjust when we're analyzing our order flow, right? We saw this move up, but then it was dumped. Probably because this was them buying the 30 and this was them selling the 10. So this whole thing that we saw here today was probably due to somebody making a spread trade. That means if I see further moves, I kind of want to consider that now. If I see a move up like this, does that mean that the 10-year treasury is going to move up and it's going to be gangbusters higher? And no, because that's probably just them buying the 30 and then they're going to turn around and sell the 10 again. Right? So that's that correlation between those. That's super important. You're just like, you cannot understand the order flow correctly if you don't understand what's going on with the spreads in the treasuries. Okay? And you want to look at the dollar, because the dollar will give you really good clues as to why it might be moving. You want to watch the Japanese yen. Okay? This move down that we had in the treasuries seemed to be accompanied by the Japanese yen. So we are getting flattening. That flattening may be due to anticipation that, you know, we are going to have a tariff trade war here in a bit. And they might be trading off of that. That would be a good reason for me to get out. I haven't been paying enough attention, but maybe that'd be a good reason for me to get out of this swing trade. See what I mean? 80% win rate from the that's awfully suspicious, HA. I would be really careful with that. Oh, a child needs to be taken to school. Save your questions. We'll be back in 5 minutes, right? All right, we're back. Yeah. How how able to predict the moves in Treasury market? I often see the dollar, Chinese yen and dollar move, or Japanese yen moves similar to U.S. Treasuries, but sometimes one among them moves and the other don't. Yeah. So going back to what we were talking about earlier, where we were saying, like, can you prove that there's an edge in watching the dollar index? Well, I can prove things about the market. So we can prove that there are correlations between instruments, and there are instances where the correlations between the instruments can explain a move that cannot be explained by the order flow within the move itself. Okay. Whether watching the dollar index gives you an explicit edge that you make money from, that's kind of the leap of faith part of it. There's always, to a trade, there's a leap of faith of some sort, right? Your application of the knowledge to that particular market. There's always a possibility of something that you don't know that matters, and matters more to the trade than the thing that you're looking for, right? It's better to actually have like a real knowledge of what the market actually is and be putting faith in yourself than it is to be putting faith in somebody's theory about what the market actually is that's not backed by any evidence. Because a lot of the way that I see retail traders trade are like, some guy 100 years ago has this opinion about what drives markets, one that contradicts the actual data that we have. But, people believe that stuff. And why? Because this guy who was lived 100 years ago, he made money. Okay. So how do you sort these things out? So the big factor that I think you might be missing here is, what are the predictors of order flow that you have, right? So a big thing that's happening today that we should keep in mind is that there is a 20-year auction today. There's a 20-year auction today. And there was a report that, Trump is basically going to hold their feet to the fire for tariffs, but that there's not going to be any tariffs implemented before February, essentially. Okay, so that's another thing. So there are going to be orders out there in the market because of those things, right? There's an auction. There are people that have to come in and buy or sell the treasuries. Often it's before the auction, it's sell to like lock in the price and hedge themselves against what they're actually going to buy at the auction. So there's a certain amount of flow that you can anticipate because of that auction, right? And that there's a certain amount of flow that you can anticipate from people hedging against inflation because of tariffs. There's a certain amount of flow that you can anticipate that is the currency movements because of those tariffs. The dollar getting stronger, which it is today, right? The dollar is getting stronger. The dollar is getting stronger. And the spread is flattening. So here on this move again, look, they bought the 30-year. They did not buy the 10-year as much. So we're still flattening, which makes me still a little bit concerned about the upside here. That, upside might be short-lived. In fact, I don't really want to babysit this anymore. I think I'll just take it off there. I wish that I had caught the top of that at 25, but that's okay. I was gone. Okay. Once you kind of can identify, so what you want to do is you see a move, you want to make theories. Okay, what was responsible for that flow? Why did that flow come through? Sometimes it is just endogenous. This is just caused by the market. But if it's just caused by the market itself, it's probably going to be like, you can see that it was just isolated to that one instrument and everything else was just reacting to that instrument, right? So by looking at all of the different instruments and kind of gaming out where the money is coming from and coming to, and doing that every day kind of gives you the experience to know what matters to be able to make potential predictions about the future. And will you be able to do that successfully? That's the thing. It depends on you. Like, see, when I trade and I'm doing poorly, it's entirely a function of how well I understand that market. It's all on me, right? I can't just go, oh, well, this is a pattern and, it didn't work that time or whatever. Because I'm making actual predictions about the future orders. Completely different mindset. But it takes time. And the thing is it's going to take you multiple years to get to that point, because one of the major things that are flows is seasonality as well. And so it takes you a few years to watch the seasonality of the thing to sort out how those things tend to go, right? When there is new information to react to, do large caps or smaller caps move or react more? Well, by and large, you're going to see smaller caps have more volatility. So if there was a move, no reason for a move, you're probably going to make more on it from trading the smaller cap than you are from the large cap. Right? Yeah. Like a IG, small cap will fall more. It will rise more in good action. That doesn't necessarily mean that you want to trade the small caps, because one, that's more risk. But number two, there's a lot more data and flows that you can track in the large caps and make predictions about. So there is kind of some evidence that we have, like predictive signals. Whenever these quants, they go and they do this kinds of analysis and they say, oh, here's a predictive signal that we found. They tend to find more of them on large instruments. There's studies that show this. So there's potentially more room for you as a retail trader to find a predictive edge by trading the large caps rather than the small caps. Okay. Granted, here on futures, we're not trading stocks. I mean, the thing is if I was trading stocks, I would be looking for stocks where I knew something about what was going to move it that day that wasn't factored into the market before that, and trade it that way. And the edge is really in what do you trade that day. Here in futures, you're either selecting one instrument that you really, really know very well, or you kind of have kind of an overview of the overall market and you're trading the macroeconomics of it. So different game. Different game. One bank calculates interest on U.S. debt by year end. It's up by a lot. Ooh. Okay, I'll have to read that, but that's a premium article, so I won't read that one to you guys. Birthright citizenship isn't real, says... who is this? Ryan McMacken via the Mrs. Institute. Donald Trump yesterday issued a new executive order declaring that so-called birthright citizenship does not apply to the children of foreign nationals residing illegally within the United States. The order reads in part, it is a policy of the United States that no department or agency of the United States government shall issue documents recognizing United States citizenship or accept documents issued by state, local, or other governments or authorities purporting to recognize U.S. state citizenship to persons when that person's mother was unlawfully present in the United States and the person's father was not a United States citizen or lawful permanent resident at the time of said person's birth, or when that person's mother's presence in the United States was lawful but temporary, and the person's father was not a United States citizen or lawful permanent resident at the time of said person's birth. Yeah, okay. So this is, the Supreme Court can sort that one out. But then this guy goes into past precedents and everything. So that would be something. Remember earlier we were saying, well, Donald Trump made an executive order about that. This is a pretty critical change that he's probably one of the most significant changes that an executive order could make, at least in terms of like long-term impact. But I don't know the legal chances of that holding up or what. Haven't they already ruled on that before in the 1800s? Oh, well, this guy says, the courts themselves have historically recognized this distinction, noting that the whole purpose of the 14th Amendment was to grant citizenship to former slaves who obviously were not connected to any other country or sovereign. This was confirmed by the court in 1884 when the court stated that the idea of birthright citizenship did not apply to Native American tribes, which were nonetheless within the borders of the United States. In short, the court recognized that tribal lands were within the legal jurisdiction of the United States, but this does not mean that everyone born within those borders was automatically granted citizenship. This isn't good enough for me to say like that's absolutely the way that the Supreme Court would go. You know what? I got out at like 23, 24, and that was the right choice. So look at what it's doing now. Do you believe me now? Like when you see it in action, I would hope after seeing that going through, look at the volume that we're getting here. Remember, I said, yeah, okay, we came back up, but look at the spread. This is just another. They're buying the 30 and they're selling the 10. So this reprieve is probably temporary because when you get a spread trade, they tend to be really big. They're not just tiny little things that just kind of end. Okay, you see it in action. You understand why, looking at those correlations and so forth is valuable. Yeah, I don't know, HA. Here's the thing. I just like what you're saying is honestly, I'm not really interpreting it because where I'm stuck at is like, okay, I've been doing this for 7-8 years now. I've read a lot of research. I read everything that I possibly can that's relevant to what we're doing, to understand the way that the market is. And I just find it hard to believe, because I am so arrogant and pompous about it, that somebody that's been trading a month has discovered some sort of inherent market behavior that will consistently make them money that neither I nor any of the other professionals that have been in this industry for hundreds of years have been able to find. Like, that's the thing. No, I'm really Midnight. I'm really not interested in selling a bot. Like, I don't think that there's anything you could do to convince me that I should sell a bot. I mean, I sell you the tools to make bots. I might show you an example bot that is not necessarily profitable, but shows you some techniques and so forth that might be useful to you to making your own robot. But I'm not going to sell somebody a strategy, even if the strategy is still hidden from them. Because alpha decay. More broadly, like, it also think of it from like first principles, I guess. The thing that I care about to share with people, and the channel is kind of morphed into, because in the beginning I thought, yeah, maybe I'll make a living from futures trading. And I thought that was a possibility. Now that I understand the market, I understand that the possibility of that happening are practically nil. And that the best that I can do is make a little bit of money from it and understand the market and enjoy the market for what it is. And I don't have to make tons of money from it, because I have plenty of ways that I make. I'm a very talented developer. I have really good skills. I know that the market isn't very good for job prospects right now, but that has nothing to do with me. That's the market. And I'm not concerned about my ability to make money in the future, just maybe my ability to make money in the next year or two because of the state of the economy. So I want to understand that. And the more I understood it, the more that I started to realize that everybody's conception of the market is wrong, and that misconception about the market results in real decisions that have a measurable negative impact on society. We assume that because the market is perfectly efficient, that whatever decision the market comes up with is the correct decision, and that's not correct. The market is not efficient. It is not informationally efficient, and the market can move in direct opposition to the fundamentals. And as an example, we were talking about yesterday, a lot of companies will do layoffs to make their numbers look good and everything, and they make money off of the stock. But all of the research that we have suggests that those kinds of moves hurt those companies in the long run, and the market pricing doesn't reflect that. So that's what I want to teach to people. And this idea that I'm going to sell a robot to somebody, I think would be in direct contradiction of those values that I'm trying to teach people. Because what I'm trying to teach people is you want to actually provide value. And sometimes that means having to ignore what the market is saying at the time and continuing to push forward with what you think is valuable. That we need to be able to do that and just not just always care what the market's going to do. So yes, you could absolutely sell a robot, and if you were able to show people that you had made some money with the robot, I'm sure that you would have plenty of people that would want to buy it, even if in the long run that robot ends up being a total dud or fails or stops working. But it wouldn't help any of those people, because we know that the edge on it would eventually go away. And just because I can make money with something doesn't mean that I should, because I don't want to go and provide the service if I'm not providing value to people, right? The indicators that I have, the things that they allow you to do, and the kind of analysis that they allow you to do is something that I believe brings value to society. There needs to be people out there that aren't just, because I really don't think it's a good thing for the robots to just do all of the trading. You have to have humans in there that understand these things and are making informed decisions about what they think the value of that asset should be. And I'm trying to teach you guys how to do that so that there's somebody doing that. And I don't expect that you will get necessarily rewarded for it hugely, but somebody has to do it, right? So that's why I provide what I do. That's why, I'm interested in making more software, because that's what I'm good at, is the software side of it, right? And I'm not going to sell something that I don't actually believe brings value to people. So if a smart guy like you doesn't make tons of profit in the market, then who do you think really makes the big profits in the market, and why do they? So the thing that you got to understand, Frederick, we have this conception, again, that the market is perfectly efficient. It's this all-knowing, all-seeing entity that knows everything about the economy and is always right. That's bullshit. The market is stupid. It's an inanimate object. Its prices are based on the people buying and selling, which is sometimes random, sometimes based on things that have nothing to do with the fundamentals. It is stupid. And the people that tend to make money in the market often make money because they are stupid. You go into the market and do something dumb. Go and put that big trade on that you really shouldn't be trading. Go and take those risks that you really shouldn't be doing. And if you do it enough times, you're going to get lucky and you make money from it. And those people that really become big in the market, more often than not, it's because of the big risks that they are taking, and not necessarily because of their understanding of the market. That's why you get all of these billionaires and people in tech companies and CEOs that make all sorts of decisions that just seem absolutely brain dead. Seriously, I don't know. I can't read Elon Musk's mind, okay? But it does seem awfully bizarre to me that the richest man in the world wouldn't foresee the potential problems with doing a gesture like that on stage and on the national stage. But he did. Maybe he's not as, maybe he's not as smart as people give him credit for. When I look at him, he seems like he's a really smart guy, but he doesn't seem like he's a socially intelligent person. It seems to me like he understands taking risk. He says, Elon Musk says that if you're not failing half the time, then you're not pushing fast enough. That's somebody that understands taking risk, right? Yeah, that was more a social. Yeah, it's like Elon Musk, going back to this whole thing, like the H-1B visa issue, both him and Vivek Ramaswamy, like doubling down so hard on that in opposition to pretty much everybody that supports Donald Trump, like all his entire base of supporters. They both completely destroyed any political capital that they had with that move. They really did. Like the other day, because I remember when Vivek came out, and there was always people in comment threads on like conservative outlets that I'm watching, like Facebook groups and Reddit forums and things like that. There was always a group of people that they liked Vivek, and I was always like, now you be careful, because this guy, he did not make his money from providing value to society. He basically pumped and dumped the stock, a medical stock. That's how he became rich. He created a medical company. It was complete bullshit. He got out before it failed. This is what happened. They don't. He's not qualified to speak about whether the H-1B visa program is good or bad. He's not. And all of the MAGA guys have kind of realized that the more people there are in the country, the less valuable their labor is. So they've picked up on it, and anything that brings more people into the country, they're against. Yeah, so they literally destroy. So now, when I saw that, Vivek was basically being shown the door, that he wasn't going to be a part of the Doge, make the government more efficient thing, and all of the comments about him were super, super negative. Oh, he's going to run for governor. I hope he fails. They destroyed all the political capital that they had because they really don't have the social intelligence. I have a lot of I've been a political watcher for a very, very long time. I spend a lot of effort because I was in the dating, I got divorced, and then I had to get remarried again, and Tinder wasn't a place where you could date a lot of people. So I did a lot of research and practice and everything about those kinds of dynamics. I wouldn't say that I'm good at it on the fly, right? So I can look at it as a social situation, and I can analyze it pretty well and predict what's going to happen pretty well. That doesn't necessarily mean that I always make the most savvy social decisions in the moment, unfortunately, right? I have the same problem that they have. So your point is, whoever can take more risk than others can make more profit than others. It just requires capital and more of a rough understanding and less overthinking. That's exactly it. Honestly, like one of the issues that I constantly dealing with, because I want to grow my community. I would really love to be able to just make a living from this and not have to worry about a day job, because I feel like there's so much more I can provide you. If I know, because of just having a little bit more time here during being laid off, I've been able to make so much, and there's so much more that I could do. But I'm watching kids, if my wife was able to stop working again and she was watching it, and all I did was make content for the YouTube channel and software for you guys, I think we could do amazing things. I think we could do absolutely amazing things. But it's kind of hard because what we do is really niche, there's not a ton of people trading futures. There's definitely not a ton of people trading Treasury futures, And one of the issues that I have is that a lot of the people that do come into it and do want to trade are maybe not actually well suited to it. It's maybe not the right thing for them. They want to get into futures trading because they think that they're going to make maybe for the reasons that I thought, right? That they're going to be the ones that figure it out and they're going to become super rich from it. And that's probably not the way to go. If you're a person and you sit down every day and you say, I think that I'm meant for something more, I think that I should be able to make more money than I am, and maybe I took the wrong route. I didn't take school seriously enough. I didn't go into the right major. Now I'm stuck in a certain career, all and I want a way out. Don't day trade. Start your own business. Start your own business. And it could be something completely new. Just look at what is the service, what is the thing that people in your area, or maybe you can think of something that the whole world needs that isn't being provided, and fill that need. And you will make so much more money. Like the average return on the S&P 500 is like 10% per year, but the average return on a small business is 20 to 30% per year. And you get in a situation where like you are taking a lot of risk, but taking the risk in this situation actually increases the chances of it happening. If you think about it with my business, which is this YouTube channel and the software that I make, the risks that I've taken, that's 8 years of my life. That's a huge risk. But part of the reason why I enjoy the position that I have, not that I'm like a huge creator, but we have 16,000 subscribers. That's pretty good. It's only because I put that much time into it, right? So the more risk you take, it increases the chances of you winning. And when you're doing that with a small business, it just goes directly into growing the small business. Whereas when you're trading futures, like, yeah, you can take risk, but like, you can also just blow it all, and how much money you've taken on it doesn't really change the chances of it happening necessarily, other than how big of a drawdown you can handle, right? How to finance a babysitter for you to make free for more content. Babysitter should be cheaper than a top programmer. Well, I don't know. So one of the things that I had been thinking about is we're like, okay, so we want to make our own platform. I would like to make my own platform that's on Rust and Python, and it's easier for me to integrate all of these machine learning things, and does all of the stuff with order flow and saving the data and managing the data for you that retail platforms don't do. That my indicator suite does for you, but the platforms don't do. And I think that to really make a good platform, like that's a big business, like NinjaTrader has hundreds of employees, I think, right? So it is something that could become a very, very large business. Probably to really create a full, complete application, it would probably take a small team of people, like maybe 5 people, multiple years to get it to a good spot. But to get it to like the minimum valuable proposition, like something that you can submit orders and does the most basic stuff for you, not so much. And so I thought, well, maybe I just need to have enough to get me through me writing it on my own for a year or whatever it is, right? But there's huge risks involved in that. I don't know if I can take those kinds of risks, right? Because I'm talking about like there's mouths to feed. Like I could potentially raise or like borrow 150,000, but then if I go over a year and I have the product but it's not selling enough to live off of, then I'm screwed at that point, right? Because now I'm taken on debt and it didn't grow the business, right? So I'm not quite sure what to do, or I'm not quite sure how to make that work. Like I really want to make that work, but it still seems to me that the most prudent decision for me is to work as hard as I possibly can to find a new day job before unemployment runs out. What's the one light bulb moment that you had in your trading life? Well, I don't think that there's one. I think that most of trading is like tiny little things, right? Like the big stuff, the market figures them out and then they're taken out of the market already, right? So it's a lot of little revelations, right? But I think that the most important revelation for me came when I was talking to the traders at Goldman, and I realized that they didn't really care that much about what the intraday price was or what chart patterns were doing, and that the price was not really very predictive of what was going to happen. That was the one thing that I kind of understood before I started trading futures that I think really prevented me from going down the path that other people did. Because you gotta understand, you guys, you're trading like some pattern and you think you have a profitable strategy, okay? Like I was literally winning contests from watching the charts and doing all of that sort of stuff, right? Just didn't, in the long run, it didn't work. But if I hadn't had that information from the traders, I probably would have continued to think that it was working, and I would have been in denial about it. And then I'd be like all these other people that I see that they really think that it works, and when they lose money, they just blame themselves, and they're in this cycle where they never get better, right? The other big shift, though, was the understanding that orders move markets. Because we, as retail traders, we seem to think that price moves markets, but it's not. Orders move price. Orders come in for a various host of reasons. If you were able to survey everybody that submitted an order and ask them why they submitted that order, you'd be able to categorize them, and you'd have a map of all of the flows in that market that day, and you would be able to explain exactly why we came to the price that we did. And that is the only form of analysis that would be completely descriptive of what's happening in our market. You have to know all of the orders. It's really what it comes down to. Once you start looking at how can I predict orders rather than how I can predict price, then you get into the kind of analysis that I think actually explains markets. So that's the biggest change that you can make. If you start there, then I think that you actually stand a chance. Whereas if you go with the traditional technical analysis that the chart is a record of all of the thoughts and emotions of people in the market, and we should be able to follow that in order to see where markets are going in the future, you don't stand a chance. You don't stand a chance. You're never going to be able to do a sophisticated enough analysis to figure out what's going on. Okay. What about Trump and the market structure? Do you think the behavior of the futures will change drastically in 2025, or will it behave similar like in 2024? Well, when it comes to market microstructure, there have been some changes to the market microstructure recently because Gary Gensler made some changes to how things like payment for order flow work and all of that. But everything that we're seeing from the Trump administration is we're going to do what the big businesses want us to do. And that means any kind of like major changes to any of those things, any kind of major movement in the cryptocurrency world where we actually take on these scammers and the problems that the cryptocurrencies are taking, those aren't going to happen. So that's not going to shift. But what will shift is that Donald Trump is a much more active, we basically haven't had a president for 4 years as far as I'm concerned. Joe Biden was really not in charge. It was pretty much his staff, and they weren't really doing anything significant. Whereas Donald Trump, he wants to remake the country. He wants to address globalism. He wants to address the high dollar and the trade deficit. Like, that's the thing that he cares the most about. And so you are going to see a market that is probably much more volatile, that is much more news driven, and you're probably going to see bits on both sides. You're probably going to see periods during Trump's 4-year term where the markets are just absolute gangbusters, and you're probably going to see periods where it's really scary. And that was kind of like what it was during his first term anyways. The beginning of his term, it was just absolutely amazing. I've never seen even the COVID rally. Even the COVID rally, I don't think really matches up to that first little bit of Donald Trump's term. Was really incredible. And then when the tariff wars came along, like, man, the S&P 500 really took it on the nose. So that's what I think you're going to see in the near future. But you use market structure. And so what I immediately think microstructure, well, there's not any changes to the rules that I'm aware of. So I don't think that we'll see changes there. Okay, so what I'm seeing at the moment is that the treasuries are continuing to sell, but they aren't making it through this area at 20.5 because there appears to be some liquidity hole. So I think that we do have some evidence that there is a large meta order selling, one that could potentially continue through. So my anticipation here is that it will probably continue to sit here for another 30 minutes or so. And then maybe going into the London close, we might see another move, which if I really had to guess, would be lower. I think that it would be enough that if I was sticking around, I would maybe take a trade on that it continues lower from here. But we are seeing a little bit of moderation in the spread, so that spread trade might be over. And the other thing is that the dollar has been trending up this whole time. So can the dollar really continue that momentum? Because if the dollar shifts around and moves down, and the dollar yen recovers, then you would definitely see the treasuries bounce back up. So those are kind of the risks on it, right? What do you think of future interest rates with Trump? Yeah, so I think that the market is correct in that there are risks to inflation with some of Donald Trump's policies. Okay. So you don't get inflation across the board when tariffs go up on certain goods. Okay. Really, to get inflation across the board, it usually has to have something to do with the money supply. But we're kind of in this spot where cyclically there's a chance of it going up, right? Now, the latest data that we got said that it wasn't going that way. If nothing changes, right? So like Donald Trump says that he's going to do tariffs, but like if tariffs do not happen in February, then I would expect interest rates to come down. I am long the treasuries right now. Like I'm long TLT. I think that the treasuries are oversold. So I think that the market is overpricing that risk. That both the risk of it happening and the impact on the markets when it does happen. I think that there are a lot of disinflationary risks, that the economy is already kind of weak, that it wouldn't take very much for this economy to just turn into like a full outright recession that would necessitate the Federal Reserve coming in and having to lower interest rates to spark activity. Like, honestly, I really don't think that this economy can handle much more of these higher interest rates. Like the job market is just absolutely terrible right now. Do you think Renaissance Technologies' consistency over all these years is true? Like, they're close fun and not interested in new clients. He never talks much about their technical side, though. Well, so he kind of does. So, Jim Simons did an interview with somebody that's really good, where he talks about, the way that it works. And he says that, like, well, commodities in particular have a tendency to trend over very long periods of time. And so that's like one thing about the market that doesn't match the efficient market hypothesis. And as they dug into it deeper and deeper, they found more and more of these inefficiencies. I think that probably a lot of these inefficiencies that they found almost certainly had to do with market microstructure and the impact of orders. Because what's going to happen is you're a momentum fund, you're trading the momentum, and then you and all of the other momentum traders getting in, you move the market. So I was watching this, what is it called? I can't even remember the name of it anymore. Oh yes, it's called Strong Source. There's a podcast called Strong Source, and it has this guy that was a commodities trader at Cargill. So it's like one of the only public sources of information about commodities that comes from somebody that was actually in the industry and actually has like real credentials, right? So worth watching. And in their first episode, they were talking about how in their small market, because he traded cocoa, in their small market, it was very easy for them to see when the momentum funds were coming in, because cocoa is not correlated to anything basically. So funds really, really like cocoa because they want uncorrelated returns. And so including cocoa in their universe of momentum assets to trade really helps them out, even if they're net losing money on cocoa, which is kind of funny. So they were able to track those funds, how much money they put into the market, how much they had moved the market, how far the market's going to move before it exceeds their risk and they're going to unwind their positions, things like that. And they could use that to their advantage, right? You get too big, you move the market. And so Renaissance Technologies definitely understands that. That's why their fund is capped, is they basically said, here are all of our edges combined together. This is how much size we can realistically trade it with based on the total volume in the market and everything. And so they don't exceed that amount, because if they exceeded that amount, then everybody else would kind of pick up on what they're doing and the edge would go away. Right? So that's why they don't talk about what they do. And it's a closed fund where they don't pick up new clients and they don't increase the size of the fund. It's because there's a limited amount of money available from the edge, right? And I think, based on all of those things, that probably what ended up happening was once they started to inform their momentum funds strategies with order flow and looking for predictors of order flow, they were able to kind of sort out that, like, okay, this thing goes up to here, the momentum traders are going to get into it, it's going to push this up, that's going to cause this other flow in this thing, and they can just kind of follow all of the cascade of flows that are going to come off of that one move and predict the way that things are going to go. And I think that that's what Renaissance Technology is probably doing. I say that because this is the sort of system that it's like when I analyze my flow, because that's what I'm saying you do, is find all of the predictors of order flow, all of the flows that you're expecting that day, add them together to determine where things are going to go. The next step of that would be, if this thing goes this way, then what flows will that possibly trigger after that, right? So if you really were to take my system and you had all of the resources and data that Renaissance Technology does, I think that that's what your system would end up looking like. Ergo, that's my guess at what Renaissance Technology is doing. But that comes back to this whole thing that is like, well, the edges that we know exist, a lot of it is the scale, right? Like, only these large companies can pull it off. Because only these large companies have the data and the information and the speed and the amount of capital necessary to do it. We're already moving down. I kind of thought that the next move wouldn't be for another 15 minutes, and that it would happen long after we're gone. But it did it before that. So I came into today with a position already on. I to some extent, I kind of would like to see it hold it longer, because I do think that in the next few weeks there's a possibility of interest rates coming back down, but it's not a risk I'm willing to take, and I don't want to hold this for multiple days. So when I was seeing that the flows were clearly not long today, I got out of it, and I think that we were able to call it by looking at the spread and analyzing that flow and analyzing what was going on with the dollar and the dollar strengthening. I think that I was able to make a really good call today, wasn't I? But like I said, your performance is going to vary based on your predictors of order flow, or how well you understand those predictors of order flow, how well you understand that market, right? It's up to you. That's the thing, is that again, other ways of looking at the market that I see retail traders promote, they just can't explain. It's like, well, the market is a perfect reflection of all of everybody's emotions. Well, okay, then how come the market has this tendency to move up on the last day of the quarter. How do you explain that? But order flow can explain that. It's because these people, they have to do rebalancing. And so that's one of the flows that you see at the end of the quarter is the rebalancing, right? And no matter what happens, we can go out there and find the information to explain what's going on. I might not always have the information to be able to predict it, but sometimes I do. And then it's on me. But at least I understand what's going on. At least I understand the market, and I understand why the market behaved the way that it did that day, even if I wasn't able to predict it, right? And then at that point, all of the burden is on you to do an effective analysis. And if you win or lose, it's entirely to do with your analysis rather than the luck of the draw, like you do with technical trading. But, you know, there's this whole other thing that, like, you know, a lot of technical trading was really, all of those ideas came off of momentum strategies. So all these people, they have this idea of what trading is. It's based off of momentum trading, and they're trying to day trade. Doesn't make sense. $113.14. So I would be very careful about trying to predict specific levels that are going to be like support and resistance sort of a thing, because the issue is if there's a large meta order and they're selling, they're going to continue to sell until they've filled all of their orders. We've got a spread trade going on here. We've got a currency trade going on here. Those tend to be pretty persistent flows. So trying to find a line in the sand and predict that that's where it's going to stop is probably not a very good idea. I would either be short or just, okay, I missed it, I'm just watching it, you know? There are some situations where you can kind of get these temporary gasps back up. Oh my. Lock sell. Okay, well that is the sort of thing that has a tendency to kind of make it pause. I wouldn't take a reversal on it, but if I had been shorted this time, I would either be taking it off there or waiting for maybe one last move before it bounces back. But that was not only was that a big trade at 19, but there is now a big iceberg at 18.5 as well. So what I'm looking for here now is, okay, so we had lots of volume. I want to see that volume die out. Like basically there's people, they were trading here. When I see the pace of everything slow down, kind of as a sign that like those guys aren't actively executing anymore. And then how do the market makers deal with that? And if the market makers don't want to put up much liquidity, like right now, 1600, that's okay at 18.5. But if we get to this point where like they're not willing to put more than 500 contracts at 18.5 and 19, and that's like really persistent, like maybe it will stack a little bit, but then, you know, it persistently pulls there. That's kind of a spot where we kind of get stuck. So there is some signs of a liquidity hole forming there, but we're still seeing the flow so far. So there's still, you know, when I'm holding them, I found I like to try and give them the chance to see if there's like a further little push. But like what will often happen is there's that further little push and then they'll come back to 19. Right? But that's not, I don't like taking a reversal on those, okay? I like taking profits on those because of my time frame. Was a critical point. Well, they did push through 14, but I don't know. Like this comes back to the whole thing about when you draw a line on the, like, how do you prove that that line was significant or not? Right? Because I can put a bunch of lines on the chart and like one of those lines is going to end up being the critical point, right? And I might even have one line and it might be relevant a certain amount of the time, right? But at what point does it have to bounce off of my line that it's actually significant? I guess I can go and I could say, I'm going to pick a random line and then see if it bounces off of it. And what's the chances of it bouncing off of my random line versus I picked this level and it bounces off of this level. I have one indicator that like the amount that like it bounces off of it like every time, right? I can't necessarily predict which way it's going to go, but like I can say that like when you have a move like this, yeah, we came here. I can't tell you if it's going to bounce off of this one or if it's going to bounce off of this one, but it bounced. Right? And then here on this one, they did it again. They bounced there. Right? Yesterday, they did it there. It's just like uncanny. It's just uncanny. So to me, that seems significant. And I have started to incorporate it into my trading to decide, you know, like if we were having to move back up, like if it did reverse, I don't think that it's going to, but if it did reverse, I would probably be looking at that 24 half-ish area right now to take profits, right? But we need more. The way to prove this empirically, I think, is beyond my skills, unfortunately. Already big volume. Well, so again, watch for the low resting liquidity. Okay, like that right there, that is low resting. See, 500, 17 half. So they traded a bunch. The market maker wasn't willing to add too much. Right? But there's still a lot of volume trading through. We want it to get to the point where the volume that's coming through, it's probably like half the pace of what it was before. And they're just kind of trading this low resting liquidity area. That's when you got a hole. Okay. That's what I look for. That says to me, this move is probably done. You know, if I'm not going to sit around and wait 45 minutes for the next rung, or I don't know what the next rung is going to be, then I should just get out right there, right? I think you have some pretty good reasons to get out at 18 now. It's showing enough of a sign that if I was really tepid and worried about it, that I would be getting out right there. See what they do at 18 half and 19. Yeah, it's kind of seems like I'm getting a little bit of it everywhere. There's still a lot of volume trading. See, there's somebody has a large meta order short on here, and their iceberg is sitting right there at 18 half. So while they're still iceberging there, it's probably not done, right? What I want to see is like evidence that the iceberg is definitely done, and now the market makers aren't holding liquidity there. Okay, so they just hit it through twice. It's at 7K. This could also be, given that it's a 20-year auction today, that could be a rate lock. On these pullback, it seems like it's pretty even across the board. So it does look to me like the shift in the spread is over. Okay. Yeah, so I think that we're probably going to be stuck in this new range for a while. Probably. Yeah, I can probably go. Yeah, I don't know. I feel like I had a really good read of the markets today. Am I wrong? I don't know. When I do that, and I feel really good about it, I don't know if the people that are new to the stream are actually going to be impressed by that or not. But it was a pretty good call today. So one of the things that I hate is that I think that our read tends to be the best. You know, after it's already obvious that the move is there, right? So you get to this point where it's like, oh, okay, now I want to take a trade. That's when it kind of stops. So we would have wanted to taken it short an hour, basically when I got out. When did I get out? Where is that? Do I have one of those open? I'm sure I have one of those open somewhere, but like sometimes Jigsaw hides it. I don't know what's with that, but I got out at positions closed 8:16. Yeah. So I'd hold it from yesterday, and I got out right there, right in that little cluster right there. Would you have been happy with that as a sell? Yes, you would. But I wasn't looking for a trade. I was just looking to manage the one that I was in and get out, right? Because I guess when I really feel like I have a strong reason, I guess in that situation, I didn't expect it to go down immediately. Just that I didn't think that I was going to get any more favorable excursion. So, still a good move. Man, look at that in the 30-year, man. Like, remember earlier we were saying like, there's something going on in the spread. They're buying the 30 and they're selling the 10, and then this came down with it all. Like this is signs that like there's probably more further downside, but that is insane. That is huge compared to everything else. So a really big move came in there. I didn't hear, by the way, I should double check here on Twitter. There wasn't any headlines that we missed. I didn't hear anything from my news squawk. Labor Department's all tenant rent index, which leads shelter inflation in the CPI, rose at a much slower pace last quarter. Okay. That's from Nick Timoros 1 minute ago. Bank of Japan worries as USB JPY stretches to the highest of the day. Yep, this was attended by some dropping in the thing. Trump tariffs, taxes, and sanctions will also target anything being sold by Russia to various other participating countries. That was 18 minutes ago. Really, we want something that's more like maybe an hour ago, right? So Trump threatens Russia. If we don't make a Ukraine deal soon, the U.S. will put high levels of taxes, tariffs, and sanctions on anything being sold by Russia to the United States. There are still things being sold by Russia to the United States. Trump to address Davos virtually Thursday at 11. Well, nothing else there. So I don't think that it was like a straight headline, but it could be some of these macroeconomic things happening. You took the hero at 18? Oh, okay. I mean, I say that I don't like to trade that, but it seems like every time it happens that Octavius takes that trade and gets away with it. So do you think there's some anonymous trader out there doing well over all these years, probably hiding some edge over the markets? It's extremely unlikely. Like, there's going to be a distribution, right? And there's going to be somebody out there that made a ton of money. There absolutely is. And that ton of money is going to be possibly in the millions. But, if 10 people get there, probably about half of them were just lucky. So, like, again, there's a lot of the inefficiencies that we know of. You need scale in order to take advantage of. The biggest inefficiency that we know of is that the market is not very informationally efficient at all. So that provides a lot of room for you to make money, But it's not very consistent because, again, like the reason why the market is so informationally inefficient is because there's information out there that's not being factored in. So why would it be factored in now? Right? So that's the trade-off that you get. You can do something that's technical and you won't make a ton, but it's very consistent. And if you're able to scale that up, then that's an amazing gig, right? Or you go the other way, which is places where there's like huge profits to be made, but you know, you might, if you're winning 50-60% of the time, you're amazing at it, right? So I go again, like, you know, I understand the flashiness and like people want to be attracted to the flashiness, and the flashiness is going to be why people might want to do certain things a certain way and be attracted to a certain way of doing things. But the game is really surviving, right? And I think that the best way to survive is to actually understand the market. And that's not necessarily going to make you a millionaire, unfortunately. But I enjoy it. And I think I'm bringing value to people from doing it. And maybe if you have a stronger risk appetite than me, you take those risks, you use that analysis, and it brings big wins to you. There are definitely people here that have done that. There are definitely people here that have gotten big wins and have found some success from doing it. They're not millionaires, but they're happy with their results. So that's the best I can give you on that front, unfortunately. I know it sounds disappointing, but that's just because everybody else is lying to you, right? The algorithm encourages them to lie to you. But I've been yapping for too long. It's time for me to go. I will see you guys tomorrow. I think that there's fairly significant development today. I'm be really interested to see where we're at tomorrow. So, see you then. Stay excellent, team.